Will the token prices permanently collapse into each other?
Okay, so that's an article that I wrote. I wrote it about a year ago, and it's about the economics of the tokens. And the idea of the article was there was a fear that perhaps the project would eventually fail and everything would be disastrous because all the prices of the tokens would collapse into each other. This is a fear that sometimes people have expressed about the project, but there are good reasons why that's not going to happen. What I'll do is I'll talk a little bit through the history of the chart, going from left to right. And when we get up to the right-hand side of the chart, then that's kind of modern day. And then we'll have an idea of what the state of the economy is at the moment and how well things are working. But if you go and look at the very left-hand side of this chart, that's the very early days of the project. This was just at the beginning of 2022. That was when we got the farms up and running for the first time, and then there was actual liquidity. People could trade the tokens, and the tokens had rational market prices. And as you can see from the chart, in the very early days, for the first few years basically of the project, the prices were following the theoretical lines pretty exactly. And I think the reason for this is that the economics was very simple. It was very reliable and robust. There was a certain number of tokens that were being produced of each type every day, and they were getting put onto the market by the miners. And the result of that was that we had extremely regular token prices that are moving along basically like clockwork. Of course, there were these occasional spikes in prices. Like you can see that there's a huge spike in the spring price that happened there. That was shortly after the spring halving in 2022. There are those kind of large deviations of the price from the theoretical prices, but they returned pretty quickly afterwards to close to the theoretical prices. And that kind of shows how robust the economy is, that the prices kind of return to where they should be after they've been disturbed. But then sometime around 2023, maybe about halfway through 2023, if you look at the chart there, there's a kind of a change in the structure, the fine structure of the lines. Instead of being kind of as wiggly as they were for the first few years, it starts to become a bit jerky. You can see this in the summer price, and especially in the winter price as well. In that period between July 2023 and the beginning of 2024, you can see a certain amount of choppiness that starts to appear in the charts. The reason for that is that that was when we had a bridge to Polygon implemented. And what happened was that even though a lot of the economy was kind of still playing out on the Ethereum chain, a lot of it moved to Polygon. And as a result of that, the kind of activity, a lot of trading activity, and basically the buying was happening on Polygon because transaction fees were lower on Polygon. And basically a lot of the activity moved from Ethereum to Polygon once that happened. And the chart that's on the website, this chart that we're looking at here, this is the chart of the Ethereum prices. So when a lot of the liquidity moved to Polygon and a lot of the trading activity moved to Polygon, you saw that kind of choppiness starting to appear in the charts. But it didn't kind of cause the prices to move away from where they should be theoretically. It just introduced that kind of choppiness, and that kind of still persisted to the present day. But if you then look at what happened in 2024, this is where it kind of starts to get interesting, because over the course of 2024, we had a growing community. We were actually quite successful at getting some whales, getting people to hold tokens, and to increase the number of people who are participating in the economy. And what that did, if you look basically halfway between July 2024 and the beginning of 2025 in the chart, you can see that the winter price increased or a lot earlier than you would have expected it to. And that's basically speculation that seems to have entered into the market that wasn't there for the previous halvings. There was kind of an anticipation of the winter halving, and the price rose before the halving even took place. And so you can see what happened if you look at the trajectory that the winter price followed after that. It does have the signs of that this was caused by essentially a developing economy of a new speculation entering the market, because the winter price went up higher than you would have expected it to at that time. And then it went, as you can see, above the theoretical line for autumn. And the winter price just poked above it about halfway between July 2024 and 2025. And then after that, the winter price dropped. When it did drop, the four prices went into a range, the 27th of November to about the 15th of December, maybe, when the prices were very, very close to each other. And this was what I was talking about in the article on the Medium. about what happens when the prices of the tokens are very close together and seem to stay close together for a long time. What happens in that period is that people are a bit irrationally willing to trade the tokens for each other at close to one-to-one rates. So during this period of a few weeks when the winter price and the spring price and the other prices were all kind of pegged to each other, people were trading winter for spring at close to a one-to-one rate. And that's something. So I don't know exactly why they were doing that. They could have gotten a better deal if they'd waited for the winter price to increase rather than trading it at close to one-to-one rates with spring. But when that was happening, and once people started to trade winter for spring at close to one-to-one rates, it was kind of inevitable that they were eventually going to run out of winter. Because at that period, this was after the winter halving, and winter was being produced at the slowest rate and spring was being produced at the fastest rate. And you would have expected, based on that, their prices to be quite different. But I think what happened was that after the initial period of speculation, when the winter price went up kind of too early, and then it collapsed down again. Maybe there was some kind of loss of faith in the belief that winter should have been more expensive than spring. But because it had gone too high too quickly, it was kind of inevitably due for a correction. And it seems that correction changed people's moods and made people think that perhaps the prices are not going to be that different from each other after all. So then they started trading at a one-to-one rate. And as I explained in the article, when that happens, the rational thing to do is to trade spring for winter, because people are trading the token that's being produced at the slowest rate for the token that's being produced at the fastest rate at one-to-one rates. And that's inevitably going to result in them running out of whichever token is being produced at the slowest rate, which was winter. So I think what happened was we had, essentially this period of early speculation. After this period, when the prices were being pegged to each other, the winter price, as you can see, it burst out of this peg and increased, and now it's at the top where it should be. And the spring price burst out downwards now. So the prices have kind of restored themselves to where you would expect them to be based on the rates that they're being produced at. And you can see in the chart that speculation did affect the market. It did cause the winter price to rise too quickly, and it did peg the prices to each other for a little while. But those speculative effects are things that can only happen temporarily, and the economics of the system is robust enough to inevitably kind of overcome these things. The article explains that it's not really possible to maintain a peg because of the prices to each other, because if you try to do that, then you're going to run out of the token which is being produced at the slowest rate, and that's exactly what happened. So I think that what this shows is that over the last few years, the economy has developed. Because we have a larger community, there's been a new element of speculation in there, but it's healthy speculation, I think. It does affect the charts, and it does show these temporary patterns, but the result is that the economics of the system guarantees that the distortions that are introduced by speculation into the market are going to be temporary. And if people are kind of behaving irrationally, for example, trading tokens at a one-to-one rate, the system will automatically prevent them from being able to do that forever, just because they're going to run out of whichever token is being produced at the slowest rate. So I think that if we had looked at the price charts a few months ago, it would have looked like the economics was going a bit weird. But that, in fact, looking back at it now, it's actually easy to see that what was happening was temporary speculation that couldn't have lasted forever, and that was inevitably going to kind of come to an end when the peg was broken. And that's exactly what happened. So I think it's a very good sign. I think it shows that the economy is robust and things are going well. I know that the market is down, but I think the good thing about seasonal tokens is that you can make a profit even if the market is down, even if the prices are low, because you can trade tokens for more tokens. And as long as you're measuring your profit in tokens, then you won't make a loss with seasonal tokens. So I hope that's been good. I hope that's given people some kind of an overview of how the market's developed. And I think it's a very positive sign. I think it shows the economy is robust and everything is working very well.
Check out this video to find out more about the unique collaboration among miners and investors in seasonal tokens. To learn more about seasonal tokens, please subscribe to our channel. Click on the bell icon to get new video updates.